So it seems like the ultimate bad news of the Russian invasion is the ultimate good news. And with that, the U.S. equities ripped back into the green on the week. The S&P 500 advanced 1.5% on Thursday and over 2% on Friday. The Dow and Nasdaq also built on Thursday's gains, with the Dow closing the day up by more than 800 points. This was the Dow's best day of 2022, and the moves came after new economic data showed U.S. personal spending rose more than expected in January, even accounting for a surge in inflation. Personal consumption expenditures, which is a favorite metric of the Fed, soared by 6.1%, or the fastest rate in 40 years. But one thing to remember is that inflation today is in large part about wage inflation. It's different when prices are increasing but wages are not. So don't fall for the doom and gloomsters calling for a housing crash just because interest rates are rising. One needs to look at wage inflation to see how well it keeps up with overall inflation. Housing is affected by interest rates, yes, but housing is tied more closely to wages and employment. And just a tip. And back to stocks. The markets have moved higher even against a backdrop of Russia's military attack of Ukraine. Although sad to say, but in reality, I think the market has decided that the Ukraine-Russia situation is a tragedy, but not necessarily a global event that's going to cause us to fall deep into a recession. And although events may change and there may be overreactions, the Fed is likely a bit less hawkish. Regardless, I believe we are still looking at a rate hike in interest rates coming March, but maybe not as much as before the Russian invasion. So, let's take a look at the charts. And now we're looking at the 6-month daily chart on the spiders, the SPY, and the close on Friday was 437.75. So what we've been watching, I think, is continuing, and that is the W formation from there down to here, on up here, back down here. Now it extended a little bit further than I anticipated, but for the most part, we're bottoming roughly here, since we did close above that on Thursday. So it looks like we're getting this reflection, this bounce, and hopefully it will continue up, but it's going to be a wall of worry as we head on up. Now, anything can happen with these kind of global events, but for the most part, I think things should hold. Again, I say that with reservation. But let's just see if this W formation continues. Into the volume. The good thing about volume is that once again the volume has declined from these previous times here and then up here. So for the most part we're heading on down, and that's good, letting things calm down. Here into the MAC, you have this bottom here in late January. Now we have this bottom here in late February showing some improvement. Now, is the fast line going to continue bottoming and basing and then next week head up and through that slow line? I think that's where the probabilities lie. Again, anything can happen with these kind of global events, especially with the weekend. Here in the histogram, pretty much the same thing. You can see the bottom there, and here we're definitely turning and attempting to move on up. So there is improvement from this bottom here up through here. We're closing in on that zero line, and then above that, hopefully we have some strength continuing to surge. Price for the change shows pretty much the same thing. There's your move here, and then this move here on up, moving toward that zero line. Things are strengthening. Same thing here with the RSI. It's at a moderate weak 48.99, but it's right near that midline or 50, and it's going to head on up next week, likely, and hopefully we continue to breach those levels there. If so, I think the market can continue. Same thing in stochastics. Nice bottom and basing here, and I would say the same thing here, showing a little bit of improvement there, but definitely fast line moving through the slow line, heading on up. into the Williams. We've made our way out of that oversold territory there between -80 and -100. It looks good. A nice W here as well. Continuing on up, we're above that 50 or midline. Hopefully it will move even higher into that overbought territory, but it'll stay up there. Hopefully it's going to, hopefully the Williams will lead the other oscillators up. So back to the price chart, one last look here, and as you can see, things seem to be holding. Yes, this plunge on Thursday went well below this level here, but for the most part, I'm going to call that a W for a win. And for today, that's ChewDog Charts. Thank you.